Welcome back to the Catastrophic Economist, where we take a look at the economic ramifications of non-financial events like natural disasters, wars, epidemics, pandemics, AI, blockchain, you name it. We look at the financial happenings thereafter the situation that is dire, life threatening, business threatening, whatever hinders the supply chain. We look at the after effects of those events. Today we're going to have a follow-up video with the wildfires. We're probably going to have some more in the future. Again, the insurance crisis in particular that's ensuing in California is a reflection of a lot of issues that I see we're going to have moving forward. So we're going to talk about that event more in the future. We're going to talk about more about insurance in the future. But today we're going to put a quick cap on it if we go into some new things in the next previous videos after this. But let's dive right into it. Thank you all for joining me today. Please like below, subscribe, and let me know what you think I should cover here on this video or future videos. If you see there's a gap that I missed out and you think that it's worth me diving into and researching, please put that below so I can dive into it. Okay. So let's get into it. So before we dive into our actual story, let's get into a few housekeeping charts really quickly. I'm just gonna skim past it. This is gonna be a quick day. But the first up is the Buffett indicator. Investors use this indicator specifically to assess how overvalued or undervalued the stock market in general is currently. As you guys can see here, the formula is right here. It's the total U.S. stock market value over the gross domestic product, the GDP. As you guys can see right here, as of September 30th, 2024, which was about 3, 4, 5 months ago, we're pretty up there, right? We're 208% ratio of market to GDP value. It's pretty high, right? That's a 67% higher value from the long-term trend. So you guys, there's a lot of things we can point to on this channel to show that we're at the end of some cycle. You're going to hear me alluding to that as we go further down the road here. And there's a lot of things that I'm going to show you guys, a lot of charts that we're going to bring up to kind of illustrate that. But right here, obviously, we are high in the sky, high off the pie, high off the pig right now in these evaluations of these companies. I can also point to the fact that the same 5 to 8 companies are running the price movement of the rest of the market, so that's another indicator that we're at the end of some type of cycle. So you guys hold on to your hats. I'm expecting a lot of volatility this year in the overall markets, not even considering if, other trends happen that are in the natural world, catastrophic wise. So that was a couple months ago. We're higher now, as you guys can see right here. We're higher than that. We're at like 60. This was at, okay, yeah, it's pretty high. 200%. 200%. All right, next, we have the CPI, Consumer Price Index. So inflationary pressures are something really important to consider going forward. We're going to talk about a lot. Obviously, they affect your personal average everyday life, right? You get worried when you go to the store and buy eggs and they're 20% more expensive than they were 6 to 12 months ago, right? But obviously, there is overall even bigger looming risk on the market, on the not just on the consumer side, but on the production side, right? So businesses that actually give out these services actually have to charge you more because they're being charged more in order to produce the product of the services that they have to, provide. So, this is something we're going to look at. Actually have 2 charts lined up to talk about inflationary pressures. You guys are going to see a lot on this channel. The first one up is obviously the CPI. This is as of December 2024. It's at 2.9. It's a little bit above 3 right now, I believe. I think the Fed just announced that they're not going to cut rates based upon a big reason why is because of the inflation rate. But speaking of which, the inflation measurement that they most notably note is the it's not the CPI. Well, they use CPI sometimes, but the PCE, the the core PCE. All right, here is the core PCE. Um, as you guys can see, the core PCE is right at 2.8 as of right now. I think that's pretty current. And yeah, we're just going to keep an eye on that. Again, inflationary pressures affect a lot of things. Um, Majority though, it's going to affect outlook. I think most notably going forward, a lot of decisions that are being made right now are because of inflationary pressures or the projection of inflationary pressures. So we're going to keep an eye going forward on all these things. Let's dive into another chart really quick. Actually, let's dive into our articles. Let's do that. Excuse me. So the first article we have up, obviously, again, we're talking about the California wildfires that took place on January 6th, 7th. Unfortunately, winds took a few sparks and threw them in the air in a few places along California, mostly in the LA region, and unfortunately took a lot of homes, a lot of businesses, and had a few supply chain shocks in that area. And they have been recovering ever since. So again, prayers go out to them. But we're gonna get catastrophic and talk about it a little bit right now. So this is an article by the Los Angeles Times. They're just still kind of bringing all this information together. So they've recently, I think, got almost 100% containment in the Palisades, and I think about 99% of containment in the Eaton fires. And the rest of them, I think, have been mostly put out as well. But they are now undergoing the recovery phase in a lot of situations. Um, a lot of stories that I read, it might take a couple years for them to actually just get the trash, just get it cleaned up, just get the trash out of there. It's going to take a couple years. Rebuilding is going to take a couple years after that. And it's going to be tough for a lot of different reasons. And insurance obviously is one of the sleeping giants, one of the things that might make it even more difficult. So let's quickly dive into some of the cost, right? So the estimated cost of the fire damage balloons to more than $250 billion. It's said that's going to be the most disastrous, most catastrophic, cost damaging fire that's ever taken place in U.S. history, and one of the top events. Period. The insurance costs they're saying from anywhere from $30 billion to $50 billion hit that the insurance companies have taken or that will take. And it's going to be a sticky situation for the insurance companies, for the reinsurers, and obviously, unfortunately, for the people, the civilians that live out there and the business owners. So let's just really quickly go into a few details of the fire and its devastation that ensued in California. So the latest estimate from Weather Forecast Service, weather puts the total expected damage and economic loss to between 250 billion to 270 billion dollars. That includes the cost of damage, loss of life, healthcare, business disruptions, and other economic impacts. Let's see here. It was so obviously again. It was the main reason they said. Hopefully, ladies and gentlemen, it wasn't intentional by anybody. Obviously, there's a lot of conspiracy theories out there, or maybe some of them are real theories that really took place of somebody actually doing it intentionally. I hope that that's not the case. I hope it's really a case of, something accidentally happened and the wind kind of just blew it out of control. Obviously, California is really dry. They also run low on water in a lot of areas out there. So unfortunately, this was a cocktail waiting to happen. Multiple fires have already scorched thousands of acres in and around Los Angeles, displacing more than 150,000 people. Excuse me, who have evacuated or lost their homes, and damaging and destroying more than 15,000 structures. The numbers that confirmed dead are 28. Unfortunately, it's a big deal. It's huge. A big loss for insurance companies. Big loss for the individuals that live out there and the business owners that conduct businesses out there. And one of a few points that I didn't mention, I don't think on my previous video, is that people obviously have a lot of businesses out there that aren't also insured. Maybe I spoke on it a little bit, but for people now trying to live out there or conduct business out there, a lot of people that didn't have insurance or anything now have to rethink. Well, is it even possible for me to rebuild out there? Which again is a big reason why I think a lot of these natural disasters are going to affect migration across the country and across the world. I think more places are under more water than previously expected. And as climate change happens and as inflation creeps up and goes higher, as political, malice, mistrust happens, people are going to be pushed and pulled in different places. And we're going to have to watch it carefully. And I'm going to have a video probably just talking about migration trends in the future. That'd be a good video to have. Next video is from NPR. This economist survived a wildfire. Now she's taking on California's insurance crisis. So Nancy Wallace. Nancy Wallace is a professor of finance and real estate at UC Berkeley and the business school at Haas School of Business at UC Berkeley. She's a former advisor for the U.S. Treasury Department and Federal Reserve. She specializes in identifying and mitigating financial risk in the housing market. So she's qualified. She says a lot in this article. I'm going to summarize a few things she mentions in here, and then I'm just going to read maybe a paragraph or two below. So Nancy is very experienced with these events, fires specifically. She has been openly discussing and warning about the insurance crisis that's unfolding in California for a little bit now. In this article, she talks about the regulatory body in California in regards to the insurance companies. So basically, the insurance companies' premiums were artificially placed low in California specifically because the regulatory bodies saw fit to put a cap on the premiums due to, obviously they didn't want to increase the price real estate wise too high to make them unaffordable for people. So they, made it so, insurance companies couldn't use a forward projecting formula in order to rope in cost for the premium, so the premiums were quoted low because they couldn't include this forward projection price model. And it was left out intentionally because of regulators. So again, we're going to talk a lot about on this channel how, regulatory bodies, the government comes in and, they try to control the market in a lot of places. Sometimes it's done for good reason. Intentions are good originally. Like in this situation, right? It makes sense that, a government wouldn't want, price gouging to get out of control and for companies to take advantage of individual people. But if you don't give companies the means, the tools to assess risk properly and charge people the correct prices, then it could affect things in the long term. This being one of them, because now they had to rejigger that. Right now, they gave the power back to the companies to say, hey, well, you can include this forward pricing model that might increase premiums, but it's more inclusive of the overall picture of risk that might happen. Well, the problem is with that is now the prices might be higher than they previously would have been. You know, um, she talks a lot about this in this article. Again, very great article. I suggest you guys, read more into it. But she talks about that, and she talks more about the fair plan, and I think we discussed that in previously. Again, the fair plan kind of made the insurance companies pool money together in order to subsidize the government-funded insurance plan for housing, right? And that creates an issue and a risk all in itself. And overall, these government interventions don't do anything long term, but make everything more expensive. And there is going to be a lot of issues in other states because similar things are happening in places like, Louisiana, Florida, Texas, where there are a lot of catastrophic events taking place because of natural disasters, and, insurers have to cover the bill. So we're going to see a lot of movement because of that. And unfortunately, I know governments come in to try to help, but, it could also hurt. So really quickly here, I just want to read maybe one or two paragraphs that I think that you guys would take something away from. Okay, so as Wallace and her colleagues found in her study, for a long time, California homes that were destroyed by fires ending up better, bigger and better and more valuable, excuse me. Cold. Will the same thing happen again in LA Hills after the latest shocking fire? So also in this article previously, before I kind of skipped past all that, but she originally talks about in previous fires, it only increased the price of the home value going forward in those areas in the past. But she's saying maybe that's going to be the same case this time, maybe not. Because again, it's getting harder and harder to insure in these areas. So who knows if people even going to rebuild in a lot of these areas going back in there. A lot of the homes, a lot of the people, obviously they have, the sentiment value is taken away because their home has already been uplifted and they're out of there anyway. And it's getting harder and harder to build and to be, productive in a vibrant city such as LA. If the costs are high when something breaks. But I think she really, starts to talk more and more about insurance companies in the middle of this article, not feeling like they should take the risk. That's a really big point that I'm going to keep bringing up. I think I brought that up a few times in the last video trying to emphasize it. I'm going to emphasize it again. These insurance companies are in the business of risk. And if the risk isn't reciprocated with the value that they're getting in, why would they take it on? And why would people stay there if they can't get insured? Or, if they do decide to stay there, then how will they rebuild? And, if people aren't rebuilding in the area, then, then probably there's going to be less businesses around there. Obviously, if there's less businesses in the area where there are more homes and the business decides not to rebuild, then, obviously that community wouldn't be serviced the same way. Say a Walmart leaves, that's really integral to that city or town or whatever. You know, where will people get their deodorant or whatever? You know what I'm saying? They're gonna drive 30 minutes to get deodorant, and they used to live right down the street from them. You know, so a lot of things are going to be considered moving forward. And again, it's going to take a long time for these things to be rebuilt and for support to get back in there. So let me get back in this article real quick. Many homes in LA Hills were forced off of private insurance policies that gave full coverage. And man, should I talk about this? I kind of talked about the fair plan last time. I'm trying not to step on my toes from my last video. You guys should double back and watch that if you can. But there was just some part in this I thought that you guys would be. Despite the current tragic circumstances, however, these burned down neighborhoods still have a lot going on for them. The views of the ocean and city are often incredible. The parks and the hiking trails will recover, they're saying, from this article. And they're still close to a legendary metropolis with a vibrant culture and a great economy and a housing shortage is already there. The land in LA Hills is still very valuable, they're saying. But obviously, it could change going forward. Here we go. Wallace expects that if the state pursues the right path to make these neighborhoods more resilient to future fires and follow throughs with fixing the state's broken insurance system, destroyed properties in the LA Hills will be rebuilt insurable in the private market, and they'll eventually return to trajectory, she thinks. All right. So, obviously it's LA. It's a beautiful city. People love to live there. But, again, something to keep an eye for watch on is people changing their sentiment. Sentiment value is very important, especially this point in the cycle. It's mostly consumer driven. Particularly in the United States here. And obviously the United States affects the rest of the world. So I would say it's important to keep a watchful eye out for, watching these experts talk and listening to them and listen to their opinion. Speaking of expert opinions, rebuild the efforts. Let's quickly talk about supply chain issues going on down there. So like I mentioned, this article is from Supply Chain Dive. I'm going to be talking about this website quite a bit. Excuse me. This article is called How California Wildfires Are Affecting Supply Chains. Again, you guys should read this article on your own time. But just a quick synopsis of the article is, there aren't any immediate big supply chain disruptions that are occurring. Obviously, I get most of our avocados come from out there in the United States. I love avocados, by the way. I love guacamole. So obviously there are some industries out there that's directly from California, and they're really instrumental for the rest of the country. Thank God, the big ones weren't really that affected too much, not for more than a couple days or so, a couple weeks. But this article talks about a supply chain disruption contagion that may take place in the future as rebuilding starts to happen. So obviously construction is a year or two away, right? Again, it's going to take a couple years for them to clean up all the mess and the debris that's out there. And then after that, they can start rebuilding. When that rebuilding takes place, they're going to need a lot of material. A lot of material from... rebuilding from, I'm just trying to pick out a lot of rebuilding. Let me just read a little bit. So supply chain impacts from California wildfires have been minimal, according to logistics experts. However, several experts noted challenges could come later once people begin to rebuild the infrastructure in their homes. The wildfires in Southern California wiped out several neighborhoods, closed streets and highways, and upended the lives of many residents in, can't pronounce this name, Altadena, Lake Hughes, Pacific Palisades, and San Diego County. The fires have not been 100% contained, as I mentioned before. This is just a little bit about the containment. Hold on, I'm sorry. Let me just get to the point here, Breland. Get to the point, man. I'm looking for the specific, like plumbing. I knew I saw that somewhere around here. Right here. Okay, items that could face shortages amid rebuilding efforts include materials such as the drywall, cabinetry, plumbing, roofing supplies, and so on and so forth. So people are expecting, obviously, a rebuilding. When that rebuilding takes place, they're going to need a lot of materials. Those materials are going to be highly in demand once that construction starts to take place. It's going to bring up the prices of a lot of those materials. It's also going to slow the rebuilding down because obviously resources are limited. It's just not limitless. So we can definitely keep an eye on this. But there is a big problem that's going to be consistently going forward, or a few problems that we're going to see a lot. Just to recap, insurance prices are going to go high. Insurance prices are going to go higher because inflationary pressures are going to go higher. Also, the amount of people that actually can be insured are going to go lower, which will also bring the insurance premiums higher. Rebuilding is going to cost more. Inflationary pressures are going to create other inflationary pressures from supply chain disruptions. These supply chain disruptions are going to exacerbate everything else. So I see in the future a lot of issues surrounding these catastrophic events. Here we're going to cover it as best as we can. And thank you for joining. Have a good day. Like and subscribe, and I'll see you guys next week. Again, we have some other shows coming up on a little different platform, not a different platform, but a different, I'm working on like different AI videos, like, cool that you can watch, talking about like historical events that have taken place of catastrophic events, and, the things that happen after those catastrophic events take place, how that society recovers and what they do, what resources they use, what do they prioritize, the bad decisions they make when a catastrophic event happens. I'm going to be talking a lot like that in those AI videos that I'm going to make. Tell me if you guys like that. But I'm working on it. So thank you and have a good week, man. Talk to you guys later.